this is part of my series called I Got a Guy for That. On my website, you're going to see there's a link that says I Got a Guy for That. You're going to find Joe's information there and all the other different professionals that I work with in all different industries. If you're looking for a painter, you're looking for an AC guy, you're looking for a home builder, you find yourself in a situation where your septic tank is backed up and you need someone, I got a guy for that, right? These are people that are trusted, that I've worked with, that have the right reputation, integrity first. They're going to stand behind their work.
Hello, how are you?
So, hey guys, how you doing? This is Joe.
Hi.
You see Joe all over my website. He is with Florida Advantage Mortgage. And Joe, if you want to kind of just share a little bit about you, about the company.
Sure. We are a brokerage, so we have access to all of the banks. We do not represent the banks. We represent the customer. And then we'll go find from the banks the best deal, and then we go from there.
Yeah, so let me ask you, actually, because a common question that I do get is, what's the benefit for working with somebody like you over calling your local bank and saying, hey, I'm going for a mortgage. You guys already know my finances. Let's do this thing.
Sure.
Why would they
sure.
call you instead?
So nothing wrong with a local bank. We need them, and they're great lending institutions, but their primary function is to be a depository institute. They get paid when they get deposits, and that creates money for them. I get paid when I close loans. So the reason that's important for everybody else is because I need to make sure your loan is closed on time, and I need to make sure that it's for the right price. So whereas going with a broker or we're going with a bank, I'm going to shop every bank that's out there. I'm going to find the best rate that's out there and the best program for you. When I go with the bank has 5, maybe 7 programs, and it's kind of a square peg, round hole thing. So it's, we're going to smash anything into where it's going to fit because this is all I can offer you. And at the same time, that loan officer from the bank is there to look out for the bank. At the end of the day, Mr. Banker, president of the bank, is the one who's going to hire and fire and bonus that person. Whereas as a broker, I'm paid on your deal right there. And it doesn't matter what bank I take it to, it's going to be the best deal.
Gotcha. So you have a bunch of different lenders that you work with.
Correct.
Okay. So let me ask you this. Sometimes, and it could be a hot market, if we put an offer in and real quick, they get a pre-approval letter, let's say from one of the big guys, okay, just so that they can get this offer in. And now are they stuck? Are they locked in? Or can they call you for you to shop the best rate, best lender for them? Like, what's their timeline? When do they have to be able to have to make a decision on that?
Yeah, so you really want to have your lender lined up the day you have a contract. I mean, you have a couple of days after that, but depending on the length of that contract, you really want to have that sewn up. The lender's going to want 30 days to get that done. Now, they can get done faster, but there's a lot of outside things that can happen, so 30 days is the average rate. If they have already gotten a pre-approval letter from one of the big banks because they wanted to hurry and get that out there, first off, I'm a lot faster than getting it from the big banks. So if somebody wants one in a hurry, call me because we can talk through it and we can get that going.
Okay.
But if they've already got a pre-approval and it's been submitted with an offer, as long as the seller is okay with you switching lenders, then it's okay. Because if your offer was presented with that pre-approval and then you switch it on them, you've changed your offer.
So it's really the seller at that point could pull out of the contract.
Could. It's doubtful, but here's the deal. I mean, let's just say it like this. Vinny, you know me, and you've worked with me, okay? So you're the seller. I'm sorry, you're representing the seller. You're the listing agent.
Okay.
And now you've gotten 2 contracts in for the same exact price. One has me, a local lender on it, and one has a national bank on it from somebody else. What are you, the listing agent, going to advise your seller on?
To absolutely go with you because I can get in direct communication with you.
And you've worked with me before, and you don't know anybody at the other one.
Right.
Now, what if I, as that seller that you just decided to tell that to, take and I flip that after I went with this one for the same price. But the thing that made me decide that was the me or the whatever else that was. If I remove that, I've changed the contract.
Okay.
So usually it's not an issue, but it can be. I mean, for example, I know I close in 30 days on time all the time.
Right.
There's some other lenders out there that have a history of 45 and 60 days, and we don't know when it's going to happen.
Gotcha.
And
delayed closings are scary.
when that happens and you see those two offers next to each other, it makes you not want one of those more than the other. Gotcha. I don't know what the word I'm looking for here, how the better way to explain it is, but at the end of the day, it's not a bait and switch, but you really should stick with the same
feel
one.
that way.
If you switch to a local lender, you really won't ever get any sour looks. It's the other way, is where
Gotcha.
your online banks have a history of not closing on time. They might be able to beat an interest rate by 1/8 of a point, which is $10 to $15 in a payment, which I'm not trying to say everybody should just throw $15 away a month,
Yeah.
but losing a $5,000 escrow because you didn't close on time is a lot more detrimental.
Yeah. Right.
So there's a lot more
Agreed.
things that come into it. And these online banks, they throw these little carrots out there and they can change things on you. So that's why not only just a seller, but a listing agent doesn't want somebody to come in and say, hey, I gave you this pre-approval from this local lender, and then have now switched to somebody who gave me a rate of 1/8 of a point higher,
Right.
1/8 of a point lower, so I'm going to switch to them. More than likely that lender's going to say, or that seller's going to say, nah, we're going to want this. Or they might say something like, I want a little bit more of an escrow down because we don't have a history with them not closing on time. So to make sure that we're not going to have that same problem with you, I want another $5,000 down if you're going to switch lenders up. They know that I'm going to communicate with them every day or whenever those communication hurdles, or not hurdles, but those communication marks need to be hit. I'm going to communicate that with them where they don't know Rocket Mortgage is going to do that.
Right.
So when they accepted your offer with me tied to it, it's different.
Right. Okay. It's funny you mentioned Rocket Mortgage because that's one of the more common ones that are out there that people will do that philosophy with. So, all right. Well, let me ask you this. So, I'll talk to a lot of first-time home buyers who know nothing on this subject. Okay. What are some of the things you would advise them to do if they are in the process of trying to get pre-approved for their first mortgage? Where should their debt be? Is now a time to buy or lease a car? What are different things that are going to impact their ability to get that loan? Sure. And then obviously there's conventional, right? And then what would you say in those regards to FHA, USTA?
Slow down.
Yeah,
We're throwing a whole
yeah.
bunch in here.
Okay.
Let's start with first-time home buyers.
Sure, first-time home buyers.
If you're looking to buy a home, the first thing that you want to do is get pre-qualified. That pre-qualification doesn't need to be a complete. Let's put it out there. It costs me money to run your credit. I don't want to do that willy-nilly if you're not ready. So if you tell me you have a 550 credit score and you're doing a couple other things out here and you're working on getting it ready and you're not ready to buy for 5 months, I'm not going to run your credit right now, but I'm going to start you with a plan. Well, let's get that thing up. Keep checking Credit Karma, pay this over here down, and we can get there, and then we'll follow up in 2 months or whatever. But as far as for your first-time home buyer that doesn't need to do credit repair, what you need to do is looking at making sure you get your down payment and closing costs set up differently. Saved up. And now I'm saying that, I'm going to say it one more time. Down payment and closing costs.
Okay.
Your earnest money deposit takes that house off of the market for you.
Right.
Your down payment is your portion of the purchase price.
So are you getting your earnest as a credit to you at closing to
Correct.
put towards your closing costs?
Correct. If we go FHA, which is traditionally the first-time home buyers program, so 90% of your first-time home buyers are going to go FHA.
Gotcha.
So that's a 3.5% down payment.
Okay.
The reason I want to take that at the 3.5% and remove the 1%, because that 1% is going to come out of the 3.5. So if I take my 1% down for escrow,
Understood.
I don't need to save up an extra 2.5 and then make that 3.5. If I have my 3.5 saved and then put 1% down in escrow, my 3.5 is still all together.
Okay.
But the biggest thing I want to make sure that you note here, we make sure all the first-time home buyers note, down payment and closing costs. They are separate. They are not the same. So the down payment is your skin in the game. So The FHA loan program is 96.5% down from the bank. They're going to give you 96.5%, 3.5% from you. So the reason that's your skin in the game there is to make it so you don't walk away from the deal, or you would lose that. So that keeps the bank's risk mitigated. Same thing for a conventional loan; it's 5% down. So the bank's gonna have 95%, and you'll have the other 5%. Now, on top of that 5% for your skin in the game, you have closing costs, which are your taxes, your insurances, your deed stamps, and your underwriting fees, your title fees. There's all kinds of different costs that go into buying a home that are separate from your closing or from your down payment. So you need to have your down payment and your closing costs separated out.
And even separate from those things, you have to pay for your inspection.
Correct.
So that's a whole separate thing that could range from anywhere from a few hundred all the way up to $1,000.
Correct.
Depending on what you want to do there, right?
Correct.
So now if you put on a conventional loan, if you only put 5% instead of putting 20%, that's where PMI comes in as well, right?
That's correct.
Okay, so what does PMI cost typically as well?
So, okay, PMI is, there's no typical cost. It's a portion of the loan. At the end of the day, you're really looking to get into the best loan for you. So let's not worry about the 5% versus the 20% for the PMI, because it really is a matter of if you have it. And your first-time home buyers generally don't have 20% down. Right. That comes from your equity from your last house, and then it gets rolled from there. So if we're looking for your first-time home buyer, traditionally I'm going to tell them to have 8% saved and ready to go.
8%.
8%. And what that does, it's going to cover 3.5% for your FHA down payment. It's going to cover about 3.5% for your closing costs. Closing costs should be estimated usually between 3% and 4%, depending on the price. So some are going to be a little. It's one of those things that are. My underwriting fee is the same. It doesn't matter if you have a $1,000 loan or a $100,000 loan. So those are static fees. That's why I can't say it's 4% or 3%. It's in between that. So between 3 and 4% for that. So if you do those two together, that's 7%. That additional 1% is going to be your appraisal. It's going to be your inspection, anything that might come. If you have 8%, you're safe. Now, I'm not trying to say everybody that wants to buy a house needs to have 8% down to buy a house. Your closing costs can be negotiated. Your down payment can't. But your down payment can come as a gift. So you can get the closing costs negotiated in from the seller. So if in that case, 3.5% is enough to get you going. Now, depending on what's going on in our time frame here, there's also special programs that come out from time to time. One that's coming out in July is the Hometown Heroes program, which will give you up to 5% for closing costs and down payment. So if you take that 5% out of that 8% equation, that leaves only 3% they need to come up with. And that 5%, their 3.5% down payment can come out of that. So that 1.5% that's remaining, or whatever that little bit that's remaining, can be negotiated from the seller, so you can effectively come out zero out of pocket.
Okay, so this Hometown Heroes program you're talking about, and I'm sure there's other similar programs. Are there special qualifiers to get that? Okay, so basically somebody shouldn't just assume that they qualify for a program. You're going to want to speak with somebody like Joe. Just speak with Joe.
Yeah.
And he'll help you figure out if you do qualify for that program and how much you'd be able to get towards that, right? Because that is a Florida state-funded program, that one?
It is a Florida state-funded program, and it runs out of funding often, and then they refund it. So it's our next window is for that is July. So if you've got somebody that's looking to get into their new home in July, they probably need to start talking to me by the beginning of June, and we can get them set up.
Beginning of June.
If they start talking to me, realistically, here's the thing. Contract July 1st. I can have a contract July. You can't do it retro. So if I have a contract July or June 30th, I can't go Hometown Heroes and then put the contract out on July 1st. So a contract can't be till July 1st, and then we can go from there. But you want to get everything ahead of time ready. So if you need to get pre-qualified, talk to me in May if it's going to take you 2 months.
Right.
April if it's going to take you 3, June if it's going to take you 1. And you know what your credit score is for the most part. You know where you're going to be. Every program is going to have different requirements for different things. There's going to be income limits on USDA. There's not income limits on FHA or most other programs, but there are credit limits, and there are other things that have to happen. So there's not a one size fits all. I get that a lot, where people will call me up and they'll say, hey, I don't want to pay mortgage insurance and I want to get out of it, which in a conventional loan, you can get out of your mortgage interest after 20% has been paid. But a lot of people just see that mortgage interest as a hindrance rather than seeing it as a help. The mortgage insurance actually is there to help the bank with their risk, to mitigate the risk to you. So it eases it up to where they can give you a better percentage. The reason I'm saying it like that is, for example, you have mortgage insurance for the life of the loan with FHA, but if I can get it for you at a full percent lower than I can at a conventional, and it might make sense for you to pay the mortgage insurance. So for example, if I can get you an FHA with mortgage insurance for $1,000 a month versus the non-mortgage insurance conventional for $1,050, it still makes sense to go with the FHA loan. So it's not before we go too far down the path of which loan program is best for you off of this video, there is no real way to do that right now. It's more, hey, let me run your credit, your work history, all your different things, your income, and let's find the best, or your cash down, and let's find the best program for it.
So it's always got to be customized, right? This isn't like picking from a menu where you're like, I like this, I don't like this. You've got to talk to somebody. Even those of you that don't like picking up a phone, you got to, right? You want to find your dream house. This is how you fund it, unless you're independently wealthy, right? Talk to Joe. I will tell you, there's many reasons why, but one of the main reasons I love working with Joe is Joe, just like me, is constantly making himself available, going above and beyond. I was just with a family last night touring Apopka, trying to help this family who's been renting for a while to find their dream home. And they had a ton of questions from me about the funding, because there was one home, they were ready to make an offer. And to answer those questions, I immediately texted Joe. We continued the house tour, and the next time I looked at my phone, Joe had all those answers for me. Whereas most guys, maybe the next business day, if you're lucky, they'll get back to you. So I'm telling you, that's the type of stuff you need, especially in the market down here in Florida. Offers are flying like that. And if somebody else's lender doesn't get back in time and Joe gets back to you in time to get that offer in, you're going to have an advantage. Hey, it's probably why that's in your name, right?
It's the Florida advantage.
It's the Florida advantage. It's true. It's true. Well, let me ask you. So my sister-in-law, who lives in Defuniak Springs, I know, so far away. This is a big state. She bought her house with USDA. Mm-hmm. So let's talk a little bit about USDA. I actually have a few buyers who are looking to relocate from New York. That are like, they make good money, but you know how expensive New York is. And so even though they make really good money, they don't have much of a down payment. Mm-hmm. So if you could lay out a little bit about USDA, and how many areas would you say here in Central Florida have eligibility for USDA?
So, USDA is U.S. Department of Agriculture. The people that stamp your meat, they are behind trying to make the rural communities able to support themselves. So housing is important for them also. So the USDA backs some loans for a 0% down loan, very similar to the FHA, except for instead of 3.5% down, it's 0%. Qualifying is a little bit harder. They need a little bit tighter debt to income ratio, and they need a little bit better credit score. Now, keep in mind that's because they're 0% down, and they have a better default rate, or I don't know what the best way to say that is. They default less than an FHA loan, because of that better DTI and that better credit score that they make that happen, even though they're still 0% down. As far as eligibility and what areas, you should check. And the way to check is to go to USDA Property Eligibility Map. If you Google that, it'll come up right away, and you'll have to click accept for their little
their disclosures.
And then it'll bring up the map. You can put in an address, or you can just look at the map and zoom in, and it'll show you little highlighted areas and not highlighted areas, and it'll show you what is and what is not eligible. I mean, so I can tell you, like right here, This particular spot right we're in is
Yeah.
not, but I can tell you right there where you can see that roof, that is.
Wow. So, but there's income limits for that too, right?
There is. There's income limits
Okay.
for the USDA, and they change often. So I don't want to say anything as far as income limits or anything like that,
Right,
because
that changes.
it might change by the time this video goes out. So
Right.
it's one of those. Just if I could really implore anybody that's going to be watching this, just if you're interested, take a look. It doesn't cost anything to take a look, and you'll know. So if you're USDA eligible, we will tell you that, or if you're FHA eligible, and we'll get you on a plan to home ownership.
So if they're looking for USDA loans, they don't have to call the USDA or go to a local meat packaging plant.
No,
They could give you a call for that.
absolutely.
Awesome. Can't beat that.
Oh yeah,
That's
and
that's
we live in
great
a
to know.
very in Central Florida. There's a lot of USDA. It's a very good program.
Yeah. Wow. Well, and I mean, with home values here, they tend to hold value pretty well. And it looks like, again, I'm not someone who can predict the future, but it does seem that the value of the land in Central Florida is continuing to go up in value. It looks like moving out from the city does tend to continually increase. I know, oh well. I know between Olympus and all the other programs that are growing in Clermont, it definitely seems like it's growing. And I know my value's gone up significantly in a short period of time. Right?
Oh yeah.
So, I mean, I don't know. I just think it would be silly to cause not having the down payment be a huge barrier between jumping into home ownership now, especially with the cost of rent.
Mm-hmm.
It's not like rent is going down, right? So again, just to give you an example, one of the families that I spoke with yesterday that I'm working with, they were like, the only reason they even considered buying is because all of a sudden their rent shot up to $3,000 a month.
Mm-hmm.
And they're finding similar properties are $2,700, $2,800, $2,900. And they're like, we could own that for anywhere from $2,500 to $3,200, and it's ours.
Yep.
You know, the problem is they don't have a gigantic down payment, and so to be able to put them into a USDA eligible property could be an easy transition for them from renting to owning without having to come up with a ton of money.
Yes, absolutely.
Right?
Right now is, in my opinion, there's not really a better time to buy. Inventory is almost non-existent. They can't build houses fast enough. People are moving to Florida. Depends on whose analytics you're going to look at, but
Yeah.
I hear everything from 1,000 a day to 1,000 a week. But it doesn't matter. That's a lot of people,
Yeah.
and we're not building houses that fast. So, are the values going to continue to go up? I don't see how they can't. I don't see how they can go the other direction.
Right.
They're now on top of that. Are the rents going to continue to go up? Yeah. Why is that? Well, fortunately or unfortunately, Orlando keeps putting out there, come election time, that they're going to do rent. What's the rent ceilings or rent?
Oh, yes. Yeah,
rent
yeah, yeah.
caps.
Yep.
So most people think that there's no real way that they can ever do that. However, it scares most landlords that says that, hey, I'm not going to be able to raise my rent if I don't get this in before this rent hike goes.
Yeah.
So every election cycle, they put this thing out there,
Yep.
and the landlords freak out and raise their rents because they can only do it before that thing happens. So it's keeping rents high. So is home prices keeping people where they are. Home ownership is at its lowest it's ever been, and it's projected to go even lower. It's projected to be at 50% in the next, I think it's 5 or 6, by 2030.
Okay.
Which is insane because a lot of these builders are getting out there and now they're building rental communities. They're not even building big complexes anymore. They're building rental communities. So the whole community is built out for rental.
Yeah.
And the only way that you're going to be able to live there is to rent. So there's not going to even be the opportunity to buy if you don't start buying soon.
Yeah, and quite honestly, it's a no-brainer when you look at the historical data of home values. Home ownership is by far way more advantageous than renting in the long term, and lately in the short term too. Not sure how that's going to play out as things do change, but right now it makes zero sense to rent unless you have not picked where you want to be and you're going to move in less than a year or two, right?
Yeah.
At that point, there might not be an upside, right? But if you're going to stay somewhere 3 to 5 years or more, I just don't see a reason to rent instead of buy.
There is no reason. And like I said, they're not making any more land, and we can't build houses fast enough. So if you don't buy now,
yeah,
I'm not saying you're not going to have an opportunity to buy later, but what will that opportunity look like?
right.
So here's one thing I can also tell you. I've never heard anybody say, man, I wish I wouldn't have bought that. But how many times have you heard, I missed my opportunity there.
Yep.
I should have bought that. I lowballed it, and they didn't take it, and they took another offer, or I didn't make the decision I should have. Never have I heard it go the other way.
Yeah.
Even since the only hiccup we've ever had in real estate was 2008. I'm sorry, since I've been in the game. In 2008, we took a gigantic kick. Absolutely. Within 5 years, it was back. The values were already back, and as long as you were in the same job and paying that, even if you didn't own that house, you would have been paying rent somewhere.
Right.
So it made no difference to you. At the end of the day, Vinny, here's what I can tell you. If you have somebody that's looking to buy and they're a first-time home buyer and they're ready to get out, July 1st, we're coming out with Hometown Heroes money. You take that in combination with either USDA or FHA, or a little bit of strong negotiation out of taking some seller credit out of the other side, you can get somebody into a home for, let's say, $1,200, maybe $2,000. I'm saying that with appraisal and inspections and maybe a little bit of wear. $2,000. What apartment or rental house can you get into for $2,000? Because you're going to need first month's, last month's, security deposit, pet deposit if you need that, and you got a moving. Well, you have moving expenses.
Yeah.
You can't get into a house as cheap as you can if you go Hometown Heroes with negotiate and close the dust.
I mean, I don't know what else to say to that other than holy cow, it's true. And I can't think of a better guy for you to talk to about that, get more details, customize the loan that makes sense for you with Joe. His information is not only going to be below on the screen, but it's going to be in the information below. It's going to be in the comments. It's on my website. All that stuff is available. And if you're working with me and I'm helping you find your dream home, then I'm going to start a group text with me, you, and Joe anyway, because I like to stay on top of the process and make sure you're being well taken care of as well.
Let me add on to that real quick, Vinny.
Please.
So please, if you're a customer of Vinny's, if he puts you in a group text to me, please understand that I work with Vinny a lot. I need Vinny to be successful, and that is, he's my guy. And don't get me wrong, you're going to be my person also, but I need to make sure he is doing well. What I'm saying here is all I want to do is add value to the deal. So even if it's not going to be me taking the deal or taking it to the finish line, I want to make sure him and his customer are getting the best deal. So why not get an extra set of eyes?
Yeah, well, and I appreciate that. In the same way, I'm still going to push you in a direction I think makes the most sense for you. But Joe's right? You want to make sure you consider your options. Joe and I both are very transparent in the process. Okay, so which means if I'm not the right fit to be your realtor, I'm going to refer you to somebody else that makes more sense for you. In the same way, if Joe feels like he's not the right guy for you, he's going to find someone for you that is. Integrity is our first core value. It's why we get along. We're very transparent people. And I'd encourage you, talk to me, talk to Joe. Let's help you find your dream home. Let's get you into Central Florida. And look, hey, real quick, before we leave, I just got to tell you, we're at the Salt Shack today over here in Clermont. Look at this view. I mean, this background right here, this is not a green screen. This is genuinely where we live. And this is 15 minutes from my house. This can be where you live. Special shout out, Alexis was our server. Salt Shack on the lake. I'll put a link below too. I've done a couple of food reviews on this place already. It's funny, Joe and I have the same taste too. We both had the avocado shrimp salad. What are your thoughts on the food?
It was good.
It was good.
I know that was simple, but I mean,
That's cool.
I like it simple. It was
yeah,
salad, shrimp, avocado, and good dressing.
Yeah, the dressing was this like citrus vinaigrette. Don't substitute it. Don't put ranch on your salad, right? Make sure you get the citrus vinaigrette. Get the extra shrimp the guy did. I'm doing keto. It was delicious. It was wonderful. So anyways, just want a special shout out. Thank you to the Salt Shack on the lake. Thank you to Joe. Thanks for being a part of this. And Hey, what I didn't mention at the beginning of the video is this is part of my series called I Got a Guy for That. On my website, you're going to see there's a link that says I Got a Guy for That. You're going to find Joe's information there and all the other different professionals that I work with in all different industries. If you're looking for a painter, you're looking for an AC guy, you're looking for a home builder, you find yourself in a situation where your septic tank is backed up and you need someone, I got a guy for that, right? These are people that are trusted, that I've worked with, that have the right reputation, integrity first. They're going to stand behind their work. So use that as a resource. If you're relocating from out of state and you're like, who do I call for plumbing or anything? We've already done that for you to make it easier on you. So you can check that out. And then come back, subscribe to the channel, and you could see, again, on our playlist for I Got a Guy for That, I'm going to be meeting with not just Joe, but other professionals. I'm going to take you on a tour as we do home inspections. I'm going to introduce you to appraisers, to septic guys, you name it. And I'm going to make sure that you're educated and you know what it is to own your home and what the professionals are going to be doing. And if you're a DIYer, feel free to use this as a resource too. So, Joe, any closing words? Any thoughts?
No.
No? That's cool. I put him on the spot because I did not prepare him for that. And just so you know, that's how we do things, right? We're just raw, real, transparent, no script here. Just a conversation between two friends, enjoying a healthy lunch and talking about what we both love to do. Sell real estate and live in Central Florida.
Heck yeah.
Right? So come join us. Come live the dream. Thanks, guys. Thanks for checking out our channel. I hope that you like what you see, and hope that you like, subscribe, and hit that notification bell if you want to learn more about living here in beautiful, sunny Orlando, Florida. And if you happen to be interested in living the dream, and you want to buy, sell, or invest right down here in the Orlando area, reach out to me at the contact information below. I'd love to help you and your family live the dream.